Welcome back to Bull on the Street. We're going to do a longer podcast today. I've been outvoted by my team members, rightfully so. Delvecchio Parks, Daniel Wachtel, and my wife, and Dan's girl, and Delvecchio's wife. Like everybody let me know what was up. I appreciate it. Bull on the Street, we're back to talk about finance. Dan, how's it going, my man?
It's going great, man. How are you?
I'm excellent, man. I'm excellent. What's happening in the world of stocks?
Stocks, same thing. They're probably up.
They're probably up.
They are up. I mean, this is what's going on. The Fed hasn't stepped in to do anything yet, and the stock market is going to continue to go up because they're decoupled from their fundamentals. But that's for another time. It's just now it's momentum. But what this has really surprised me. The slow iPhone 8 sales.
That hasn't surprised me, man. People are over it. Steve Jobs has come and gone. Miss him dearly, but we all knew he was the catalyst there.
Yeah. I don't see Tim Cook like running down and like yelling at people and throwing the new product.
It's not even about that. He's not an artist. You got to be Pablo Picasso when you're trying to build a firm like that. You got to be, you got the entrepreneur is an artist in itself, So Delvecchio is joining us, Bull on the Street podcast. We have our partner at Servitude, Delvecchio, on the Instagram comments, and he says we need to put the podcast up on Apple Podcast. That's somebody that has an Apple computer because my PC. That's another thing about Apple. He said, well, let me give you what he said. He said Apple Podcast, SoundCloud, and Stitcher. So we have it on SoundCloud. We definitely post it on SoundCloud. We put the videos on YouTube. And we need to get Apple Podcast and Stitcher. I've got to get my girl on board. She has an Apple computer.
Well, I have an Apple. I don't know what that means. Apple
because Apple Pod, iTunes.
That works.
We got to get it on.
I didn't know you needed a Mac to
Dude, PCs and Macs, PCs and Apple software do not historically work that well together. At least in my experience. I don't know. Somebody correct me if I'm wrong. But I've had PCs my whole life, and every time I have to do an iTunes thing or something to do with an Apple, it's a biatch.
Yeah, I don't do like the most things that I do with Microsoft is their Word, their whole Office, but they have it for Mac, so it's not a big deal. Like that's the only time. But I usually don't. I only because everything is nice and neat when I have like an iPad, I have my iPhone, I have my MacBook. Everything kind of comes together very nicely. It's a nice package. But I am actually very, very surprised that I guess maybe they're waiting for the Apple iPhone X. I don't know.
I'm not waiting for any of these phones. I think they're overrated. I think that, get yourself a $100 phone. They all do the same thing for the most part.
Yeah, that's what you got? You got a $100 phone?
Maybe. I don't even know if it costs that much. I don't know. It probably costs $150.
I know you're an Android guy.
Yeah, I'm an Android guy. I'm not messing with the Apple. I mean, I just been with it for so long, and the value is too good for me. The Apple phones are just so pricey. I mean, I see the value. Like my girl has an iPhone and I take pictures on it, so it's like I see how good the phones are. But I'm shooting on my Android phone right now, crystal clear. I'm live on Instagram. I mean, it has all the features. Why are you overpaying? They're financing their phones. We talked about this in the last podcast. People are financing their damn phones, man.
I mean, a lot of the like Samsung phones. I think they said, I've read recently, Samsung's going to make $4 billion off of Apple because they use a lot of Samsung products inside the Apple iPhone. But to spend $1,000 on a phone because you feel that you're cool, I guess.
I love what Peter Thiel says about Apple and some of these guys. It's like He's like, is removing a button or adding a button really such a big innovation? Like, like they come up with the Apple 1, 2, 3, 4, 5, 6, and it's like, dude, after it was like, okay, like the Apple One was a big innovation. It was such a small incremental value add. When you get to the 2, 3, 4, 5, it's like, what are you really getting that's so above the mark that you need to run out and get another phone?
Well, there wasn't much difference from the original Apple, and then they did the 3G, and then
Are you running on an Apple? Do you like Apple? You have an Apple phone?
I have the 6S right now. I skipped to 7. I'm probably going to skip to 8. Because what they do, they're smart. Like my phone, as soon as the 8 like kind of hit, my phone just was like, I'm gonna run slow on you. Like they know when it's like it's gonna deteriorate.
Yeah, so, well, they keep adding. Oh, the Repad Diaries joined. We got him and his girl on. They said the internet's slow in Africa. We got Dalvecchio in the comments section of Instagram. Join us at Nikki Nice Brands, at the Repad Diaries, at Dell Anthony 25. We'll go live on you at any time. Let's talk about. They say Google or Apple is planning a huge LCD iPhone next year. Let me see what the headlines for Apple.
That should be the X.
6 years later, 6 charts. The MacBook Pro. Bunch of analysts. You click on the news section for Google Finance. It's just a bunch of analysts, not really news. I guess it's just a bunch of opinions.
There's an opinion that people are like, I hate Apple stock in October. Like
Apple stock is actually kind of attractive. 17 times earnings. It's a really low PE ratio. They have a PE of 17.
Ton of cash. They should be taken up in a.
They actually look like a really good buy, except that they always look like a good buy before they belly up. But $800 billion valuation. They're probably the first to be close to $1 trillion. They might be the first. I made a vlog before. It said, it's going to be a tech company that becomes the first $1 trillion cap.
Oh, absolutely.
It's
you got Alphabet, and they're gonna get there. Apple.
Right now we have Apple market caps on the tech sector. Apple 800 billion, Microsoft 584 billion, Alphabet, or what was formerly Google, $676 billion. The only difference is the revenue is 200 billion at Apple, 89 billion at Microsoft, 90 billion at Apple. So literally Apple makes twice as much money. Apple makes as much money as Google and Microsoft put together, which for those that understand, like it's number 1, 2, and 3. Like they're twice as big as 2 and 3.
Well, I understand. Like not with. Come on, Microsoft, get your shit together. But
I'm surprised. Like that's perplexing to me because it's like. Microsoft also pays out their cash. I guess it doesn't really matter. They're not making as much.
So does Apple now as a dividend. So
had a dividend. How many dividends have they issued? Oh no, they do. They really are spitting out cash.
Yeah, they do have a ton of cash. Realistically, if you look at what they're in, I don't see their balance sheet or their income statements. I don't see there right now, but I would like to see the money that they make just off of the investments of the cash that they make. It's got to be a ton of money because they have a ton of cash.
They have a lot of money. They have a lot of money, and they're giving out a dividend yield. They kind of look like a buy. The only problem I have with that is that, you look at I just like it when the founders are around,
Yeah, but they kicked Steve Jobs out before, and then he died. But it is nice when they can survive. And
but come on, that cash that's coming in is based off of the products that were birthed with his energy around.
It's even crazier than them having $77 billion in cash is that they have almost $109 billion in debt. So
that's some bull on the street right there.
That surprises me that they have. I know like R&D.
Well, a lot of these guys issued debt as soon as the the interest rates went down, they were issuing long-term bonds and debt to to take advantage. I would take 7-year notes right now at 3.5% or 10-year notes right now. If I'm Microsoft, I'm issuing at least $1 billion in bonds for the next 10 years because I know that the workforce, the engineers I have can make me 20-30% of my money. So I'll take that money cheap right now for sure. For sure. And that's what they're doing. A lot of these guys are issuing 7-10-year bonds. As soon as their interest rates went down to nothing, they started. If you're smart, you're issuing a bunch of bonds.
Well, you would have been issuing bonds as going, but there was no, the interest rates were nowhere.
That's the point.
I mean, so you would have been issuing bonds for the last 9 years.
Yeah, well, I mean,
but they didn't need to. I mean, their revenue is $224 billion because they have what like Microsoft doesn't have.
Apple's impressive, man. Apple's impressive.
Apple is impressive, but the one thing that Apple has is they have a core of people who will line up for days for the new phone.
Yeah, they have that cult-like following. They built a great brand. You know, I always go back to what Steve Wozniak, it really is a great company, but Steve Wozniak says something that I totally agree with, which is he says, you know, what I don't like about Apple, and this is him criticizing, right? For those who don't know who Steve Wozniak is, he's the co-founder basically of Apple. And he says, I don't like how they have closed integration systems. So like when you talk about how some systems don't work with other systems, like what I was talking about with the PC and iTunes, and like certain systems they're not open. They're not an open ecosystem. Like you have only the Apple phone can read certain Apple apps, right? And he was saying that when they started the company, the reason why the company grew so much was because everything worked with everything. Like everything that they made worked with everything. And that allowed more apps developers to come in, that allowed more partners, that allowed more people into the ecosystem, and more apps and software into the ecosystem. So he was like, that's what allowed for the growth. And he said, as the company grew, they got greedy. They get greedy and they want to own your phone number. They want to own, you know what I mean, your email. They want it all in the same ecosystem. They don't want the Gmail app on your iPhone or the Google Calendar on your iPhone when, you know, the iPhone calendar can do the same thing. You know, they'll just keep the iPhone calendar there.
You know, it's you know, and I don't really think it was like Steve Jobs who did that. I believe it was after they fired Jobs, they started to do weird things because they were down to like $1, $2 a share. They weren't a player at anything. But when they started out, they used Windows, Linux. They used pretty much any type of operating system. And then when they came out with their own, they were now direct competitors with Microsoft. And then they became more of when Jobs came back, they came out with the iPod. I think right after I think he came out and he made those colorful, wonderful iMacs or just Macs, whatever. They're like back in the late 90s. They were, you know, you could get teal, purple, whatever color you wanted Mac. And then as soon as the iPod came out, the whole company changed. It's when Apple became Apple because there was nothing like that at the time. And you know, Microsoft came out with the Zune. Have you ever seen anybody with a Zune?
No.
Yeah. No, I would laugh. I'd be like, why? Did really? You have a Zune?
You know what I like? I'll tell you what stock that I just rolled up on. Welcome back to Bull on the Street. If you guys are watching Bull on the Street podcast, check us out on SoundCloud, Google Play, currently YouTube. Check out this stock, BlackRock Inc. What do you know about BlackRock Inc.?
They print money.
Woo, boy.
BlackRock, dude.
BlackRock Inc., huh?
They were spun off by Merrill Lynch, and ever since then, they've just been
29% margins on their money. BlackRock Inc. is an investment management company. BlackRock provides a range of investment and risk management services, blah, 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 blah. But basically, iShares exchange traded funds, ETFs. Go look up iShares. You'll see how much money they're holding in their books. But they make only 11 They're pretty small. They print money, but not like Apple, right? 11.
Well, they're not. They're not. This is more of like a service, and it's an investment company as opposed to a.
11 billion. So put that in perspective. BlackRock Inc. Yeah, that's it. Del Vecchio is better than the iPod. I have a Zune. Del Vecchio says he has a Zune. We're getting a little bit of the delays, right? I have a Zune. It's better than an iPad, iPod, and BlackRock Inc. Yeah, we're talking about BlackRock Inc. right now. These guys only $11 billion, a measly $11 billion compared to Apple, which is $200 billion, right? To put in perspective from our last segment.
I'm not going to say Zune is better than a iPhone, but all right. I mean, I had a Zune when it came out. It sucked.
What the hell is a Zune?
It was Microsoft's attempt to compete with the iPod itself, and it failed horribly. I don't even know if they make them anymore.
Yeah, I think after the iPod came out, it was only a couple of years, so we had smartphones.
Yeah,
and then once the smartphone came out, it's like there's no need for an MP3 player anymore.
Well, when you came out with the iPhone, you cannibalized basically the iPod market, and that's why they're really only down to one type of iPod. Before, the big deal with they kept around the iPod was it looked like an iPhone, but you could have more space, and then you had the iPod Classic, which I think at one point was like 160 gigabytes. But now you have iPhones that have 256 gigabytes. So it really just cannibalized that revenue stream for Apple. But going back to
Amen, what up?
Going back to BlackRock and iShares, they got that for some reason. Merrill Lynch divested them.
Well, we're talking about BlackRock Incorporated. The stock ticker is BLK, and they're at a 2.18% dividend yield, 11 billion in revenue. These guys own a lot of trusted money, right? Because they're basically holding money for other people, and they're running ETFs through BlackRock.
Yeah, it's very. They're everywhere. I mean, everywhere you look. When I was on the advisor side, they're everywhere. I mean, iShares. If you want to buy an ETF, you usually buy some iShares, and they have pretty solid funds. It's just I can't for the life of me think why Bank of America, Merrill Lynch would sell them.
Because to let them survive.
Well,
they were spinning off pieces. I mean, I don't know when that happened, but I mean, banks. It's funny. When I worked at Miro, and I remember walking in, and the advisor there had a vice president. And I thought to myself, I said, "Wow, it's such a nice title, man. I'd like to have a title like that one day." And she was like, "Everybody here is a vice president." But she, that was like one of my introductions to how fast those banks spin off. And she was unfazed that, they were going through the acquisition of Bank of America, I think, or they were getting acquired by Bank of America at the time. And she was unfazed by it. And she just had a long career in banking. And she was like, these banks get spun in and out of each other, all the time.
I mean, if you look back at Wells Fargo, American Express, or if you look Wells Fargo, Morgan Stanley, Bank of America, Merrill Lynch, they've been consolidating for like hundreds of years.
Yeah.
Bank of America, I think Morgan Stanley had American Express at one time.
It's a great book for that. Del Vecchio says he's just going to listen, want to chime in, but taking 10 minutes to type a message. Africa's slow. We got our one of our partners in Africa. Africa's pretty slow but we love it, man. Chime in whenever. We can still do business together, which is cool. We have improved as a society, right? We're talking to this guy, like we can literally still do business with him.
Yeah.
What were we just talking about?
Why Bank of America?
Oh, that's what I was going to say. I was going to say the house that Morgan built. Great book. The book is probably like 2,000 pages. I don't know who has read that book. There's probably 4 people in this world that have read that whole book. But I have it, and I did not read it all. So I am not in that four. I'm not in that list of 4, but I've definitely read some of the book. And it gives you a detailed look into how the Morgan family started and where, like, because you hear these J.P. Morgan and then Morgan Stanley, and this Morgan name is thrown around a lot. And the house that Morgan built it was a banking house, a banking family, I should say, that started maybe 6 generations ago, 7 generations ago, and they just have built a powerhouse of investment banks and broker dealers and regular banks, and very interesting. But they've consolidated and unconsolidated over time. But great read for anyone who's interested in.
And they were part of the first terrorist attack in American history.
Good Lord, that's a bull on the street.
If you go to J.P. Morgan's building, which is across the street from this New York Stock Exchange, right on Wall, and it's right across from the old the George Washington statue where he got inaugurated. If you look all across the J.P. Morgan building, it has potholes from the first quote-unquote car bomb and terrorist attack in American history. So there you go. Yeah, that is what I know.
So what else is going on in the news? Let's talk about something else here. What other companies can we look up for these guys? Bull on the Street, guys. Follow us on Google Play. Follow us on YouTube. Follow us on SoundCloud. Nicholas Coriano, Daniel Wachtel. What's going on, Dan? What's going on in the world of business?
The world of business is booming, apparently. It's just booming. But do you think the market is overvalued at all?
Oh, we're going back to that question. We're going back there. I think that there is always opportunity out there. That's what I think. I think that most of the market may be overvalued, but societies have a way of creating value. That's why stocks go up. And when you look at PE ratios and what it can be taken to sustain, do I think the American market, you're talking about comparatively, yeah, it's overvalued compared to a lot of markets in the world. The American market is, but is there still room to grow? Yeah, there's opportunity. There's opportunity in a lot of these companies. A lot of these companies that have the ways and means will benefit internationally with bigger margins. And God, I don't know why we want to talk about Trump right now, but this fool keeps talking about jobs. He's so hard on that it's a powerful voice. He has a powerful voice, so start creating more jobs, start creating more contracts. God forbid we have a war and he gets any kind of budget approved, just going to go into a massive spending spree, and it can push the markets even higher, man. The markets can go higher. That's my point. I just say, is it overvalued? Yeah, but it doesn't imply a crash. It's coming.
No, it doesn't until I believe they start to take out the money from the quantitative easings. Once they start taking out the $4.5 trillion on the Fed's balance sheet, that's when things are going to get shaky, because they started raising rates, and that didn't do what they thought it was going to do. It didn't really take a whole lot of money out of the stock market and put it into the debt or the credit market. So that kind of scared them a little bit. Now you have inflation underneath what they want it to be. So it's under 2%. So they don't really know what they're going to do, and they don't know how they're going to unwind it. So I do believe that it will continue, but when you talk about a market, let's say downturn, not a correction, because I'm looking at more of like eventually there's going to be a bear market. With the bear market, it's going to take everything down. You know, it's going to take, that's market. Any type of market risk you can't diversify yourself out of. So it's everybody's going to get hit, but then it's going to give you more opportunities again. If you sort of can plan to start moving to cash little by little as the market keeps pushing up. Yeah, if you buy a stock and you miss 5, 7, 8%, but you save yourself 20% on the downside, that's where you try to look at the risk analysis part of it. And to me, it's a little too risky to get into some stocks. Some stocks, if you want to rate them, that's fine.
I like to give me my dividend earners. It's never too early or too late for the most part, at least in my eyes. It is about timing, right? It is about buying it at the right price.
Yeah, I mean,
when you say is the market overvalued, I'm like, yeah. I mean, that's like saying that there's no deals out there. There's plenty of deals out there. Like, there's a lot of dividend producers that are gonna raise their dividend rates, and if you're looking at those future earnings, they look attractive. I mean, that depends on what you find attractive. Some people only 30% is attractive, 40% is attractive. Some people 7%, 8%. It depends on what kind of return you're looking at. If you're looking for 100% returns, yeah, the stock market's always going to look like trash. There's only, historically it gives you 7%. What do you want? There's stocks right now that are paying 3% on their dividend yield. If you can find a one, it's always been a game of if you can find the one. I mean,
3% a year, that's cool, but you have to look at if it's going to appreciate or if it's going to depreciate.
Look, this is how I see the market. I see the market, and I say, at any given time during the market, all the time, for 99% of the time in the marketplace, it's about studying and being right about your buy and when you buy it. And then there's going to be that 1% of the time that you can buy anything, because it either A, has been depreciated so low that if you're holding it, it's going to bounce back because the general market had a collapse, or B, which is what's going on now, you could just buy it because everything's going up. Right. So, and when I say everything, I'm not talking about your risky penny stocks. I'm talking about the market stocks like the Dow Jones or the S&P. I mean, there's obviously, if you're talking about penny stocks, you're talking about just risk. There is no up and down market for penny stocks like that. That's a totally different thing.
I mean, the spread on anything in the like the OTC markets are huge.
Just non-liquid stocks. This doesn't even have to be the OTC markets. Like there's markets that you could trade on the Chinese stock exchange or the New York stock exchange or the NASDAQ and have low liquidity and have a thin bid-ask spread.
Well, it's funny that you said like the Japanese market or the Chinese market. To be honest with you, I don't know anything that goes on over there. Do you see? It's just all numbers. Like that's what.
Yeah. They list in Asia a lot. Some of what I don't know about. I'm not want to put a blanket statement because I don't know enough about this. But what I have seen, they have the numbers instead of like Microsoft. It'll be like a company 001 or 002 or 2343.
What the hell is that? Like,
it's different. Yeah, I mean, they're very systematic about it. There's no branding in the stock ticker, right? There's no branding in the stock ticker. It's just a number.
You're like really, really pumped up about 174452. Like that's my shit. You're like, what?
I'll tell you what, it probably cuts the bull out of the investment thesis, because here, you see a fancy stock ticker that spells a word like home or whatever, and people get excited. That does good for marketing, and even having the name Amazon.com or AMZN.
Well, I know the New York Stock Exchange does hold certain single letters for certain companies. So if they ever do go public, they can get just a single letter like they did with Macy's and things like that. But they're running out of them. I mean, there's only
they come in and out. They come in and out. Actually, I should get my buddy on this show, the V Stock Transfer, Lisa and the V Stock Transfer team on this show, because he put out a good article the other day about what happens with those stock tickers and how they get selected. And basically what I remember from the article was that they're all open until they're taken. And you can like hold them for a certain period of time, but not forever.
No,
so planning on going public.
what I was New York Stock Exchange itself will hold it because they want to kind of. So if they're competing with, let's say, NASDAQ, that's who they compete with, because NASDAQ over the past 20 years has become a player, I mean a huge player, and so they'll hold just a ticker symbol, just a single letter ticker symbol, MX, like for certain stocks. So it's like, hey, you can come over here, and that was kind of like the big thing with Facebook. But the Ford had it, so they had to go with FB. So there's a few single letters left for ticker symbols, and that's like supposed to be a big deal if you get a ticker symbol that's single letter, like you're the man.
Yes, yeah. I mean,
You're like the coolest company.
I remember that was the biggest thing. It was. I mean, it's still kind of something, but it was for a long time the really big thing, and then the New York Stock. So it was. I remember it was odd when NASDAQ first started, and they had 3-letter, 4-letter.
Yeah, it's 4
tickers,
letters.
and people were like, "What's going on here?" You know, like something so new for them.
It was because it's. I think anything like usually 3 and under is New York Stock Exchange, and anything above that is the NASDAQ. Or at least that's the way it used to be, like when I first started.
Yeah, well, if somebody's listening, hook us up and let us know what it is.
They don't have G. G's. It used to be Gillette. C's Citigroup. J. They don't have a J. They don't have an L. They don't have an M. They don't have
an M. They should have an M for money. I thought
Macy's was M.
It could have been. That's what I'm saying. They changed them. Think about it. Google was GOOG. Like they don't have that anymore.
No, they're Alphabet. Yeah, they had GOOG and then GOOGL and then Alpha.
Yeah. Which I don't.
I thought it was always it is Macy's. I don't know why this thing's telling me it's wrong. I thought I was going nuts for a second. It's Macy's. Like this, whatever website I was on, you're an idiot, and I hate you. Because the first second I was really like, I thought I was like on acid. I was like, what? This was.
So the NASDAQ Composite has gone from 5,000 to 6,005, 5,400 to 6,500 in a year.
Yeah, I mean it's because it's super tech heavy, and tech is one of those industries where even that people that I talk to all the time, I ask them like, what do you want to invest in? What are you looking for investments? And they'll say, tech, fintech. No matter, it's like anything.
There's a lot of money getting thrown, but I think there's so much room to grow there. If you look at the NASDAQ Composite chart, starting from 1980, I mean, it is ripe for a run, man. It's I don't know, man. I don't know. I think that software is something that is displacing so much. It's just I hate to use the word disruptive, but it is. It's disruptive, and it not only disrupts, but it consumes industries. Software like Uber is consuming logistics industry. Like, not only did it take away the taxi cabs, but now it's taking away the delivery boys business. Like, it's so consuming. Not only is LegalZoom doing your LLC, but now it can form your partnership, and it can do a ton of basically everything a lawyer can do, and then an accountant can do, and then a service provider can do. So it's not like they're just disrupting. They're consuming things. So, and then they're scaling, or their ability to scale is so massive. So when you talk about the NASDAQ Composite, Gmail or AdWords in America might be a lucrative service for Google, or YouTube might be a lucrative service. We're not even talking about the applications to these things in other countries, or what combining, some of this software will do for their bottom line. It's really remarkable what software can do, man. So the tech companies, it's almost laughable to say they're in a bubble, because last time we said they were in a bubble, of course, there was a lot of shitty companies out there, but that's like anything, But some of these companies are just gonna gobble the Dow 30 or the S&P 500. That's what I think.
Well, the difference between now and 99 and 2000 is that a lot of the companies are revenue producing. They have.
Yeah, they're winning. They're winning. You got companies now that are winning. They're private and they're winning.
Yeah. So you're dealing with companies that actually are, it's almost a complete opposite of what it was in 1999 and 2000, where they had ridiculously high PE ratios, but they didn't have anything to back it up. This time, the PE ratios are relatively high, and it is, but the companies can back it up for the most part. Like companies, like Google and things like those type of companies. I'm sorry, Alphabet, which is
Right.
Why did they do that? I don't. Let's change the name that we've had that is so marketable to Alphabet. Like, stop. Like, doesn't make any sense. But there's also companies like Twitter that haven't really figured out how to monetize that well. And you have companies like Snapchat. Like, some of those are sneaking in, and you're like, eh. And there's a lot of new companies that are just going public because, everybody's investing in tech, so they'll throw money at anything that kind of makes sense. And so
I think the IPO market is going to ramp back up. I think there's a lot of profitable tech companies out there that aren't public yet, So you have a lot of companies that are actually making money, a lot of e-commerce. I mean, I know just from my private company business, from my private consulting business, I've run into, at least a dozen millionaire e-commerce businesses in the last year. Like, they're making $1 million plus, like between my clients and my incubator space, like they're making over $1 million a year. So these are just tiny businesses, there's a whole bunch of businesses out there that are making that kind of money now, and they're not even thinking about the public markets.
They don't wait. If they're doing that, it would be ill-advised to go into the public markets, because you start giving up. You start to give up.
You don't need it,
and it's not going to help you.
You don't need it.
A lot of times you go public because you want to. It's sort of like an exit. You can sell your stock. But
yeah, if that's the case, I mean, you have to put a marketing budget. You're basically selling your business when you're doing that. When you're doing an IPO to cash out and get out, you're basically selling it and hoping to keep some stock on the back. I mean, other than that, I don't know why you would go public, or unless the person buying it has convinced you that they can raise the money that way or through that vehicle, or has a vehicle that can buy it from you. But
it's an exit. It could be your early investors. It could be if you got any private equity money, and it could just be greed. Somebody.
It could be somebody who wants to value it 20 times.
Yeah, I mean, if you have.
That's the beauty of it. I don't know if that's greed. I mean.
I don't care if it's greed or not. I love it. I'm not opposed to greed.
I love it. I met a guy the other night that said, "I'm gonna change the world." He was so charismatic. I'm gonna change the world. I said, "Yeah, how are you gonna do it?" He's like, "Through money." He's like, "The biggest problems in the world are people don't have their money right."
He's not wrong.
He's not wrong. That's exactly what I said. I said, "This guy's spitting truth, man."
Yeah.
Change the world.
I mean, he really is not wrong. There's so many areas in the world that conflict. I mean, you could take it. You could even do it on a micro level. Families, they fight more over money than anything else, and then you get to a macro level, and some of the countries have issues because of money. It all comes down to
a lot of the wars and poverty-stricken places is because of lack of finance. Like, they don't have the money to eat. You get hungry, you start getting crazy. The bulls on the street come out. The bulls on the street come out, my man.
AK-47s cost like $3, so it's like, all right, we're going to take you over, and that happens ultimately. I mean, look at Greece. Greece has been, I think it's probably 2 or 3 times Greece has sort of been lifted up by the EU, and there's a certain segment of the youth population that don't have any jobs. There's nothing lined up. There's nothing for them. And then every so often they sort of have an uprising, and then obviously it gets squashed. But, countries like that have notoriously been very volatile throughout the history after World War II.
And that's where the opportunity is. You know what? Big shout out to Rick Ross. Just put out a song, Santorini, Greece. And basically he bought some property out there and he's trying to market it. So he put this song out there to market the island. And it's a beautiful island. Go look up the song. He takes a video of the island. But great opportunities, man, when things are hitting the fan, right? Because Greece hit the fan. And I'm sure he went out there and bought that waterfront property. The same thing I'm doing here in Miami today is that the hurricane just hit. If you look behind me, if you're seeing us on YouTube, look behind me. I got the ocean back there. Looking where the deals are, right? But anyway, big shout out to Rick Ross. Ricky, we want you on the show.
I'll take the other Rick Ross, actually.
Which one?
The real Rick Ross.
I'll do both. I'll take the, come on, man. Rick Ross is, at this point, he is the real Rick Ross.
No, man.
I know what you're talking about. I know what you're talking about. They have these personas that are modeled after the other real personalities. But the truth is, come on, man. Shout from the. If you ask 9 out of 10, 100 people who Rick Ross is, they're gonna point to Big Fat Boy.
Yeah,
Big Fat Boy with it. I'm gonna see it's reading.
But even Rick Ross, he was selling supposedly CIA cocaine, and what the best part about it was, he went in there. He was illiterate, and he got himself out early because he learned to read, became his own lawyer, and got himself out on like a technicality. So he's out of jail. Like, this dude was selling a ridiculous amount of cocaine. So shout out to both Rick Rosses, for one to learn how to read, yay, and the other one to know how to rap about a place you just bought a house in.
All right, we're gonna end this podcast there, man. Or you got another subject you want to talk about?
I want to just say that in the last couple of days, Brazil's stock exchange has hit an all-time high. South Africans has also hit an all-time high, and I think on the 3rd it became the Dow's 44th time it hit an all-time high. So, yay!
That's something to think about. That's something to think about. Yeah. Guys, follow us on Bull on the Street. Check us out on Google Play. Check us out on SoundCloud. Bull on the Street. Check us out on YouTube. And you'll find all our information, guys. Thanks for joining us.